The following is for information purposes only and should not be considered investment advice. All opinions and views expressed by the contributors to this podcast are in a personal capacity only. They do not represent the views of Progressive Equity Research or any other organisation mentioned in this podcast.
Okay, it is Friday, the 31st of October. Welcome back, Jeremy.
Yeah, happy Halloween.
Indeed, yeah. Looking forward to tonight's excitement and mystical celebrations across the world. In the meantime, we've got a little bit of discussion to do on what's been going on. Obviously, Trump's been active, lots of activity in the US tech space, and I think we should talk a little bit about whether that's a bubble. And then some hopefully more positive news closer to home. But yeah, why don't we start with Trump and Xi and what you thought of their much vaunted meeting?
Well, yeah, self-acclaimed amazing meeting by President Trump that he said on a scale of 1 to 10, he put at a 12. So, yeah.
Fantastic.
The official statements for both sides were a bit more muted than that. And I think it was notable that the schedule, I think they had 3 hours scheduled for a meeting and they took a little over an hour and a half without much being revealed other than both sides saying it was productive and they've agreed that they're going to meet on 2 further occasions, one in the US and one in China. So I think probably my takeaway from it is that it's as good as one could have hoped for. I think the setup that Scott Bessent and his team worked on in the days and weeks prior to this was sufficient in terms of getting the ground rules in place. It sounded like it was a business-like working meeting. They've sort of agreed to hold fire on their sort of worst threats for at least another 12 months. So, yeah, I think we're in a period of détente in this sort of second Cold War, as it's been described.
Absolutely right. It certainly feels that way. And you're right. The fact that they've got a couple more meetings scheduled, it would be a shock if either side suddenly tried to change things in the short term in advance of those meetings or having had this apparently productive get-together. And Scott Bessent has been quietly playing an absolute blinder, hasn't he, on a number of fronts. Behind the scenes, he's the kind of fixer, just getting things done. And he had some good news in terms of US inflation this week, didn't he?
Well, yeah. Yeah, although obviously he's the Treasury, not the Federal Reserve. But I think in the fullness of time, it's going to be hard to distinguish between the two, maybe. But yeah. So hot on the heels of the sort of slightly delayed US inflation report from a week ago, which was okay and in line, showing a sort of 3% year-on-year inflation, the FOMC came through this week and duly gave the market the 25 basis point cut that it wanted, albeit I think quite surprisingly, in the press conference afterwards, Powell sort of poured quite a heavy dose of cold water on the idea that we're going to get another cut in December. So that sort of led to a slight wobble in risk assets and a spike up in the value of the dollar, which sort of unsettled things. We can come on and talk about big tech results this week, which got the market back on the front foot again. But as far as the monetary policy side of things, obviously there's the FOMC meeting, but there was also a release from Scott Bessent naming his shortlist of candidates to fill the Fed chair vacancy that comes due early next year. So he's really sort of fired the starting gun on the race to succeed Jay Powell. But I think in that context, I think it was quite surprising that we got this hawkish cut that, you know, one would have thought that some of these FOMC members would be jockeying for position to try and burnish their dovish credentials in front of the Treasury Secretary at this stage.
I don't know how the politics goes of these pronouncements and how much of it is just Jay Powell and how much of it is a genuine sort of consensus sort of committee view. But I remember it wasn't many months ago that Jay Powell was almost waving the white flag and signaling that he was going to bring rates down. And now that's changed. Yeah, he's not going without a fight.
Yeah. You know, obviously there's the dual mandate of the Federal Reserve around inflation and unemployment, and the dynamics of the employment market, the measurement of inflation and the measurement of employment, given the government shutdown, of course, is another dynamic here that this data isn't being collected at the moment. So I guess part of it could be just the concern that we're all going to be flying blind for the next few months. And I haven't really seen much commentary about that.
No. And at the moment, we've been getting data which was collected before the shutdown started, but now the shutdown's in full force. They're not really collecting the data they need. So it'll take a while for them to collate that and then publish it once the shutdown eventually ends. So yeah, you're right. We could be flying either partially or completely blind for a number of months going forward. So yeah, that could be a concern in terms of confidence. Yeah. So one country that's been trying to have a smaller government is Argentina.
Yes.
And they've been doing a pretty good job.
The man with the chainsaw. Yeah.
Indeed. He had some news this week as well.
Yeah. Well, everyone had started to write him off, saying he'd managed to cut government spending, done the easy bit of fiscal consolidation, ripping through the government. And actually, there was some provincial election results in September that didn't go his way. A bit of a panic around the dollar convertibility issue and the high value of the peso. So the whole uncertainty thing, and there was a lot of people coming out from everywhere saying the Milei experiment has failed. Argentina never misses an opportunity to miss an opportunity, as they say.
Right.
Always disappoints. We've been here before. And what do you know? We have the midterm congressional elections over the last weekend, and he secures a sufficient position in the Congress from a very low level, which means now his future legislation cannot be blocked by his combination of political opponents. So he's really unlocked the Congress, and he, along with some friendly help from the US Treasury and the IMF, he's now in a position, I think, to secure a second term in 2027. And he's already laying out a legislative program that will lead to a full convertibility of the peso before the next presidential election, and a much healthier picture for inward investment into Argentina and the unlocking of the huge resource base that country has. So, yeah, we'll have to see.
Yeah. One of these years, he's going to have to consider himself a politician because
yes,
he didn't really want to be a politician, did
exactly.
he? So, So that's Argentina. Interesting developments there. Meanwhile, in the States, we had a really pretty busy week in terms of earnings from the big tech players. So what are your big takeaways from the news here?
Yeah, and I think the 5 big tech companies that have reported this week represent something like 25% of the whole of the US stock market, which is probably about 15% of global equity market valuations just from 5 stocks.
It's not even including Nvidia.
No, exactly. Right. We'll come on and talk about Nvidia in a sec. But yeah, this week saw a number of these big tech companies report. And I think there's evidence here that the market is starting to differentiate and discriminate against the potential winners and losers in this whole AI thing. So Alphabet, owner of Google, seemed to score highly. Meta seems to be struggling, and Microsoft is a bit not quite so sure. It's an open question as whether we're in a bubble or not. But yeah, I think we're getting to the stage where the market is trying to work out who the winners are going to be.
Yeah, it is. It's phenomenal. And I think one of the stats that you came across was suggesting $78 billion of CapEx has been spent in the last 3 months alone by 3 of these businesses.
Yes.
So it's huge amounts of money being spent. It's phenomenal. And a large proportion of that is being directed to Nvidia, who've got the lucky position that everybody else's CapEx is their revenue, which is
exactly.
a great place to be. You've got Nvidia, who are providing the traditionally described picks and shovels. Everybody else is spending on those picks and shovels. And yeah, this week we saw the market start to differentiate between people who are spending wisely and people who are just spraying money at AI, but don't necessarily have an obvious plan or a way of monetizing it as well as the market might hope. And perhaps Meta is the one that is beginning to crack in terms of people's confidence on it. But I think that the broader point is that you have different types of bubbles and there are valuation issues, but there's also a real world reality that AI is a fantastic technology. There are fantastic use cases already being exploited by companies across the world. And these 3 big American players are well positioned to benefit from some of that. Nvidia is well positioned to benefit seemingly from almost all of it. And there's going to be huge benefits to society and to humanity as we all see the rewards of that, or see the benefits in our daily lives. So that there's a huge amount there. But some of these people may be spending their CapEx dollars or Nvidia's revenue dollars unwisely. And the market does seem to be starting to think about that a little bit more closely this week.
But at the moment, as you say, all roads lead to Nvidia.
Yeah.
It's noticeable that Nvidia has a slightly different reporting cycle to the other Mag 7 stocks, and we don't hear from them for another couple of weeks. But in the meantime, the Nvidia share price is continuing to power ahead, and it has now become the first $5 trillion company, which is just remarkable.
Huge milestone.
Yeah. So just as a bit of fun, I don't know who to attribute this to, but someone has posted that Nvidia is now worth 2 Canadas, a Germany and a half, all the US regional banks combined, all the world's billionaires 3 times over, every pizza sold in history, every item sold on Amazon, NASA, SpaceX and Boeing combined, all of Manhattan's real estate, every oil company on Earth, and all of global gold reserves combined. If you happen to own Nvidia, that's what you might be able to trade it for.
So there's a lot riding on this, you could say.
Yeah.
So yeah, hopefully those use cases continue to show themselves.
Yes.
So all of this AI power, the data centers are very, very power hungry. And we've had some interesting comments from Bill Gates and others this week on net zero and its impact on power prices. What's been going on there?
Well, just something I've noticed that we had this week, both Bill Gates and the UK government has started their inevitable, but probably at the moment still quite gradual descent from the top rung of this sort of absurd ladder they've been on of complete net zero absolutism of recent years. Bill Gates has decided that, no doubt from the fact that he's still quite a major shareholder in Microsoft, that Microsoft requirements for baseload power for their Azure business and their AI ambitions exceed his ability or the world's ability to impose energy immiseration on the rest of us. So
right.
As this was happening, we also got news from the FT that dear Rachel Reeves is about to remove the windfall profits levy on North Sea oil and gas. And we got the news that Ed Miliband has walked back from the very unpopular total ban on gas-fired domestic boilers in the UK, which had met a lot of political resistance. So I just think there's growing evidence that as this AI capex cycle expands, reflected in this huge valuation of Nvidia, and as you say, rightfully say, the critical factor to make this work is the energy requirement. And in politics, I'm afraid money talks. And the biggest accumulation of money in the world today is among the Mag 7. They need energy. And the politicians are going to respond, and they're going to have to keep on climbing down these ladders. And I think the absolute pursuit of net zero by 2050 is inevitably, I think, going to fall by the wayside, whether you like it or not. And, I appreciate it's a contentious issue. I think this is a fascinating development. But I think from a market perspective, it makes the setup for investing in energy very interesting indeed.
Yeah, I guess you could say if AI is driving the requirement for lower cost energy, then they've got the influence to deliver on that. But the beneficiaries of that will be far beyond the AI landscape. There'll be lots of people benefiting from cheaper and more plentiful, lower cost energy in all walks of life.
Yeah.
And you mentioned Rachel Reeves and her potentially walking back the profits levy on North Sea oil.
Yeah.
We've got a big announcement from Rachel coming in just a few weeks' time. And it's starting to feel like the backdrop for that is a bit more positive. We had Cavendish talking this week in a quite upbeat way, and it's beginning to feel a little bit more positive. Is that fair, or is that the rose-tinted spectacles coming out?
Yeah, I think it is. The UK market ahead of the budget, it's not the doom-laden, crisis-ridden place that perhaps we all feared it might become. I mean, it's not been great, and we haven't enjoyed the boom conditions of the US stock market.
Sure.
But we're seeing a healthier stream of IPOs that seem to be pricing and trading and getting off the ground. And there's also this sort of persistent anecdotal talk of US and other global capital being allocated to the UK again. And I think there is evidence of that now. One doesn't need to get carried away with it, but it's not as bad as we thought. And obviously it's still early, but, I think this cycle of bearish expectation ahead of the budget could actually lead to an environment where we get a relief rally into and over the period of having the budget, and maybe a setup where we could have a sort of pretty healthy market into the end of the year.
Yeah, we could be talking ourselves into some kind of improved sentiment. Just imagine, wouldn't that would be nice?
Yeah,
so
make a change.
See how it goes. It would make a change. So yeah, good. Well, on that positive note, let's call that quits. Thanks very much again, Jeremy. Great to speak, and we'll talk this time next week.
Okay,
good stuff.
See you then.
Talk to you then. Cheers.
Brought to you by Progressive Equity.